Okay, well, I'm just going to go over this some things about this company, CDPR, Cerro De Pasco Resources on the Canadian Stock Exchange, and why I think this is a very unique opportunity or company compared to the vast number of typical junior mining companies and exploration companies out there listed on the various stock markets. As a disclaimer, I'm not an investment advisor. I'm not affiliated with the company. This is not a paid promotion. I'm doing this analysis for free. I have recently bought some shares in the company, and so I guess that's the disclaimer. So, what's unique about this company and its opportunity is the fact that this company is sitting on a massive mineral resource that has already been mined and is sitting above ground. This company has got mineral title to one of the largest above ground tailings piles on the planet. It's roughly, it's got title to approximately, according to its website, 75 million tons in this tailings facility, and another 76 million tons in an ore stockpile right beside the tailings facility. So there's the ore stockpile here. There's the tailings facility down here. So in this ore stockpile, this material was originally mined and never run. It was considered waste material or low grade material, and this material has never been run. There's 76 million tons of material there. This is another picture of the ore stockpile. Um, so what's unique about this is this original project was mined starting in the early 1900s, and I think it went up into the 1960s or so. And so a lot of these early mining companies, when they in the early 1900s, a lot of them would high grade what they call high grade their material. So they would go in and selectively just take the best material and leave low grade material either in place, or it would come out with you know, basically come out with the higher grade ore, and then the low grade material would be put aside. So this is what there's 76 million tons of material here, low grade material that's never been mined, or sorry, never been processed. So here's another. This is a Google Earth picture. There's the original mining pit. There's the ore stockpile, and then here's the tailings pile facility here. And this is all. I think there's the distance between the pit and the tailings pile is about. I think it's only like 300 meters here, or sorry, 3,000 meters. And that picture is done August 15, 2023 on Google Earth. So here's another picture, Google Earth picture of the ore stockpile. 76 million tons they estimated at. Here is a Google Earth picture of the tailings facility, estimated to be around 75 million tons. So, and what's unique about this is it's very different than modern tailings. So, in a modern mining operation, if it was like a Barrick or a Newmont or somebody like that, they're able to recover like 95% of the metal, economic metal, out of the rock that they're processing. But what's unique about this is a lot of this material was processed in the early 1900s, and the studies that have been done on this over the years, they estimate that the recovery rate was only 60%, which means they're roughly estimating about 40% of the metal is still in these tailings, which is a huge number. I mean, today that would never happen. You'd be lucky to have 5 or 10% metal in a tailings facility today. And so here is um, the mineral. This is actually their. You can see that orange sort of strip here, which I'll put this over top of it. That's the boundaries of their mineral claim there within the pinkish purple. And so there's the tailings facility down here. There's the ore stockpile here, and their calculations are roughly 76 million tons in the ore stockpile and 75 million tons in the tailings facility. So, and here's a little bit closer up view of the main mining pit from Google Earth. This thing measures. It's huge. It's 750 feet deep by 5,900 feet by 3,500 feet across. It's basically a mile and a half across by 3/4 of a mile across. And then you've got this town built around it, and the which is again very unique in modern mining. Most modern mines are built way out in the middle of nowhere, where you have to build a camp, and at great expense, and bring people in, house them, feed them, and all this other stuff, which is very expensive. So in this case here, this operation, they'll be able to pull their labor pool from this town that is built around the old mine. And so when these people show up at work, and then after the shift, these people are the labor force is going to go back to their own houses that they pay for, and their own food that they pay for. So the company doesn't have to build a camp and pay for all this food and all this other stuff that a lot of these modern mining operations have to pay for. And here's another picture. So I just grabbed a screenshot off of a YouTube video that shows just a little bit more detail on the scope and scale of this old mine here, and you can see the houses that surround this old mine. And you've got actually they're still mining. Well, apparently the early mining history, and this goes back apparently around 400 years, but the bulk of the mining here didn't happen until the early 1900s. But they're actually still mining this area today, and so I've identified this area here, outlined this area where you can actually see. You'll see in the next slide here that they're still mining this area today, although this is just outside the CDPR mineral claim area. So this is a close up on Google Earth here, on from that slide above, and you can see there's a haul truck there. It looks like a front end loader, an excavator, and this picture is dated August 15th, 2023. Okay, so another great feature of this project is that this company, this project uh, has the prior flotation plant sitting basically about 580 meters away from the tailings facility here. And so this is another major expense that the company doesn't, not only an major expense, but also the time to construct it and get it all permitted. Well, that's all done. So this company can CDPR can potentially tap into this flotation facility here, um, and for basically virtual, very, 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 if any cost, the cost would basically be a percentage of the metal recovered, some sort of a, they do some sort of a revenue sharing um, arrangement, is by the sounds of it. But so they don't have to, the time and money and expense to build this is not even there. It's not an issue. So that's highly unique. Any to build all this material, to build a big huge flotation tank. I mean, you're talking huge money and huge amounts of time to construct it and get it all permitted, and all the environmental issues and all that sort of stuff. So that's something this project has that can catapult it way ahead of a typical mining project in terms of both speed and cost. And so here's actually a picture, or sorry, this is the distance. I've measured out the distance on Google Earth here. The the distance from the edge of the tailings facility to the flotation tanks is 584 meters. So it's very, very close. So here's a Google Earth aerial picture showing this flotation facility, and you can see the flotation tanks down here, and it's sitting on it's a large operation, 22 and a half acres. It occupies 22 and a half acres. And my understanding is that this entire facility is really not being utilized, and so the owners would really benefit by getting those tailings running through this operation here. It would be a real lucrative situation for them to all of a sudden start being fed um, those tailings that have still got roughly 40% of the metal still in them. And it's not just that flotation facility. According to the company's website, I pulled this off the CDPR website. Apparently, there's two other flotation facilities in close proximity to these tailings uh, facility. You got one here at just over 2,300 meters away, and another one at just over 3,000 meters away. So there's more than one flotation facility in the immediate area that may be utilized to process this material, and that apparently the three plants together have a total processing capability of 20,000 tons per day. So, and then I grabbed a Google Street View of one of the flotation facilities, and so this is the one that sits about 3,000 meters away from the site. The other ones couldn't. There wasn't Street View available. This is the only one that Google had imagery for, Street View imagery for, and you can see that it looks like the place is still in pretty decent shape. It's not doesn't, at least from this angle, it doesn't look like the place is falling apart and dilapidated. The So also another unique situation here as far as timing goes is this company's only just recently been granted access permission to their tailings project, and they've been trying for several years to get the proper unrestricted access to these tailings. And I don't know, there was some sort of issue that prevented them from getting it, but they're only granted proper access to these tailings just a few months ago, back in May of this year. So this is a press release from the company regarding them getting access to proper access to the tailings, and also the fact that they've been working on this for several years, getting that access. And then in late August, so just a couple months ago, the company PR'd their, in addition to the proper access they've recently been granted, they've got the permits and authorization to do the drilling, the exploratory drilling on the tailings, and so they've only just started doing the drilling on this project here, primarily basically in just in September they started. So, and here's their drilling plan to do to basically prove out the values in the tailings there. They're planning 40 holes here. And so what's unique about this compared to, a typical hard rock mining operation is to drill out this 75 million ton resource, they're only drilling. This is, first of all, it's soft material. To drill tailings is super easy. Like it's not like drilling hard rock, um, where it's very very time consuming, very very expensive to drill. This is this is the easiest case scenario for exploratory drilling you can basically come across. And so I believe the depth of the tailings is only somewhere around 10, 20, maybe 30 meters deep. I think it's maybe say 10 to 20 meters deep. So they don't have to go very deep, right? So they're, if let's say they go 20 meters, well, that's peanuts compared to going, say, 200 to 500 meters on a typical hard rock drill exploration project. And, and to drill a 75 million ton resource in hard rock, on a hard rock project, I mean, it would take you years, like several years. It, major, major, major tens of millions, many tens of millions of dollars in expense. Where this here, I mean, they could do 40 holes here basically in months, and for just a tiny, tiny fraction of what it's going to would cost a typical mining company doing hard rock exploration. So this is another area where this company's going to be able to go way faster than a typical hard rock mining project, and way way cheaper. So, and here's some tweets the company's been putting out. Just as this was put out on September 9th here, so basically just a month ago, of the drills getting set up on the tailings project. And here's another tweet here on, looks like they're extracting some core samples out of the drill casings. So, and then so here's the numbers on, what they're estimating, how much metal this just the tailings, not even involving that ore stockpile, but just the tailings alone. These guys are estimating that there are 464 million silver equivalent ounces locked up in the tailings project. And so that's huge. Like 464 million silver equivalent ounces is puts this thing in one of the larger silver equivalent ounces on the planet. There's very very few. I mean, there's only a handful that are that on the planet that are that big. And so, as far as revenue goes, you take 464 million silver equivalent ounces at $30 an ounce. You're talking $13.9 billion US in revenue, and which is this is a big big project. Or if you take the 464 million silver equivalent ounces at the current gold to silver ratio of 85.6, well, that equals, that's a gold equivalent ounces of 5.4 million ounces. Gold equivalent ounces. That's big. That a tier one gold project is 5 million ounces. So this is a major major project. capable of producing, very, very large amount of revenue. So, and so one of the, the major benefits here is the fact that this type of work has already been done and paid for by somebody else. So they don't have to, um, you know, there's no expensive trucks like this. All this millions and millions of dollars per month in operating a typical major um, open pit mine. It's not going to apply here. So it's not just the expenses that this company is going to save by not having to run millions and millions of dollars a month in all this heavy equipment, but the amount of time, like this, the amount of time that it would take to excavate a pit of this size and go down this deep and excavate out 75 million tons of material, and you're talking many years. So it's also, by having all this material already up on the ground, up on the surface, they're going to be able to, they're going to save enormous amounts of time as well. And the and so how this company is going to transport the material from the tailings pond into the flotation facilities is basically through pumps. They're going to basically put a trench in that tailings, get some water, and there's probably water already in there down lower. If not, they can pump some water in, and then basically float a dredge, and then put these big slurry pumps, powerful slurry pumps that are built specifically for moving material like that over long distances, and pumping that using the slurry pumps to pump the material is basically the lowest form of haulage, lowest cost form of haulage that you can pretty much do. It's just a tiny fraction of what it costs to move stuff around by truck. So moving stuff by slurry pumps and pipe is super cheap. And so this is the type of pumps, these heavy duty pumps they can use. That these things are built for moving rough sort of tailings type material. They typically use these things to move a lot of sand, like if they're doing dredging and moving sand in riverbeds in the oceans and stuff like that. So these slurry pumps are built for moving that type of material. So then on sort of the long term vision here is to. I got this off the company website. Their long term vision is to eventually clean up the environmental mess that the old mining companies have kind of basically left in the area there, and turn the basically turn the original pit into a lake, and the same with the tailings facility. Um, so there's some, in addition to the jobs, there's long-term social value here for basically improving the quality of life long term for the local residents and the environment. And I think that there may be some challenges there to sort of, in the long run, to see it through to this extent, and primarily that's because the CDPR does not own all the mineral titles in this entire district. So there are There are other smaller operations small operations that own parts of the mineral titles around the CDPR claims, and I think that may complicate long-term cleanup. I mean, CDPR will be able to clean up what's in within their property boundaries, but to sort of see this full vision through some of these small miners that control some of the properties around the CDPR um, mineral properties, they they may not have the money to do the this reclamation, and they may not want to do the reclamation. They may want to continue mining on on their claims if it's economically viable. So that may be something that complicates somewhat the long-term cleanup of this project. But CDPR will be able to they'll be able to control the cleanup in within their own properties. The management team pulled this off the website. I don't really know anybody off you know off this management team, so I can't really comment on their expertise. The board of directors here, I did note this one guy here, John Scott Carr, appears to be a mine builder with a successful track record as the co-founder of New Century Resources, which is a fairly large zinc producer. And then you've got Eric Sprott. This is interesting. Eric Sprott's taken a pretty big position in this company. To the best of my memory here, I think he's purchased over 40 million shares in this company. And if somebody put this out on Twitter here the other month, and what it appears to indicate that during 2024 so far, CDPR has actually been the second largest new cash outlay that Eric Sprott's made in the junior mining space. So he's made dozens of new investments in 2024 in various junior mining companies, and CDPR seems to be one of the largest new positions that he's taken. Okay, so what we've got here is some charts. We'll get into the charts on CDPR, and this is a 4-year weekly chart. And so I like doing the sort of the three anywhere between a 2 to 5 year weekly chart to get an idea of the sort of longer overall trend. So we'll start with the RSI up top here, and so the RSI, as you can see, the neutral line here at 50 is for the past 3.5 years, it's mostly been trending below the neutral line. But you can see here over the past since May, when this company got their access permits, that the RSI has been trending above the neutral line there, and so that's a bullish signal. And then you've got right now it's on a bit of an up. The RSI is on a bit of an uptrend. Then you can even sort of the access permit you can kind of see in again sort of corresponding with this May date where the where this downtrend where this price action really started picking up here is in May of this year. And you've got certainly a reversal in the trend lines in the characteristics of the trend lines. So you've got on the moving averages, I've got the 20, the 50 and 100-week moving averages. And what you can see is, for roughly about 3.5 years, past three and a half years, these moving averages have all been going down in pretty close synchronization, right? And with the price leading them down. And so what's happened is you can see that the green line here is which is the 20-week moving average. It's actually it's been trending up since basically early May. And you've got the blue line, which is your 50-week moving average. It appears to have bottomed and is very, very close to crossing over the 100-week moving average. And the 100-week moving average appears it may be making a bottom and may be starting to curl up as well. But what you've got here, the important thing to really note here on the moving averages is that they that descending trend is in the process of shifting. And so now what you've got is you've got the price leading the 20-week moving average up, with the 50-week looking like it's about to start to curl up as well, with the 100-week looking like it's about to, like it may be bottoming as well. And then as you get down into the MACD indicator, so the neutral line on the MACD indicator is really important, and it's a important trend signal. And so the zero mark, your neutral line, when the MACD lines are below the neutral line, like were for basically 3 years down here, that's a very negative trend on price. But when the MACD lines come above the neutral line and they stick above, when they trend above the neutral line, that indicates a trend change towards strength, towards an uptrend. And so that's what's happened since basically early May here is these MACD lines have come up above the neutral line and are now trending above the neutral line. And then you've got, just in the past 3 or 4 weeks here, you've had the MACD signal line actually cross over into a bullish formation above the MACD trend line. And then what I've got is I've got another weekly chart here, but this is on a 1 year basis, so you can see some of the moving averages, some of the lines and whatnot a little bit clearer. And so there's your RSI trending up here recently over the past 4 weeks. You've got the support trend line on price trending up here, starting to trend up. You can see it's consolidated here and is now leaving this consolidation zone. And for the past 4 weeks, you've got a series of higher lows here. And then you've got the 20-week moving average. You can see in the green line here, you can see it's clearly in an uptrend now. You've got the 50-week moving average here. It's just starting to turn up. It's just starting to trend up, and you can see right there, it's actually just in the process of moving up, crossing over and above the 100-week moving average. And then on volume, of course, volume super, super important as a price indicator. Is you've got a trend. If you look back into late 2023, early 2024, you've got very little volume down here in this area here. And a little bit of a pickup in volume in March, April, but then in May, sort of corresponding with this permit that they received, you see a decent spike in volume here, and you've got a uptrend in volume here since May. So this stock appears to be being accumulated now, And certainly for the past 4 weeks here, you've got, you know, what appears to be the stock moving into stronger hands. And then, you can take a closer look at the MACD here. There's your neutral line. There's your crossover from there's your crossover into above the neutral line for both MACD lines, and trending and staying above the neutral line, and then this recent crossover here into a bullish pattern.